What is going on, guys? Today we're going to be going over what exactly I would do with a $500 account. This is the second part of the series. The first part I started with $1,000 and what I would do with that. This time I'm going over what I would do with a $500 account. If you guys want me to continue to make this a series, please consider subscribing, leaving a like, comment down below what other account challenge you guys want me to do, whether it's $100, $2,000, $5,000, whatever. This is what I would do. Obviously not financial advice. This is just what I would do if I started out with $500, right? So number one, we have to determine our risk, and this is the biggest thing. You always want to start out with how much money are we able to risk properly, right? Now it's going to be a little bit harder with $500. You guys are asking for a lot with $500. The biggest, I would say, the biggest thing with this is I want you guys to educate yourself. Obviously, this is for entertainment purposes only, because you're not really going to get too far with $500. Obviously, it's not about how much money you have now. It's about how much money you have later. But you need to get back in reality. You need to educate yourself first and be disciplined so you're able, no matter how much money you're making now with only $500, let's say you're making, I don't know, $50 a day, $20 a day. It's not about how much money you're making now. Don't let that discourage you. It's about being disciplined and educated enough to when you do have enough capital, you'll know exactly what to do with that. $500, remember our 2% rule. If you don't know what our 2% rule is, basically means that we're not allowed to risk more than 2% of our capital per trade. Obviously, that's not the position size. That's just the risk, and I'll go over that in a minute. So 2% of 500, that's going to be around $10. So our max risk is going to be $10, okay? Let's make this white. Max risk per trade is going to be $10. Now, you can put it 5%, so 2 to 5%, because 5% is going to be 25 bucks. You're getting a little difficult here. If you really, I would probably do 5% risk, just because how small of account size this is. You got to be careful, of course. But let's just do max risk, because this is exactly what I would do. $25 since it's 5%. Obviously if this is your only $500, you might want to move it closer to that 2%. But for the most part, let's just do it with 5%. So this is our max risk right here. And for example, with a $500 account, it's going to be a little bit difficult, right? So for example, utilizing that max risk, let's say we get into, let's just say this is Tesla, right? And we know before we get into the trade, we're going to lose 10% of that position. If we lose on this trade, we're going to lose 10%. You always got to focus on, before you get into the trade, where is my wrong, right? Every single trade, no matter what, no matter how confident you are, you should know where your risk amount is. You should know when I'm wrong, right? That moment right there. That moment for us, that trend reversal is 10%, right? If we're wrong, we're going to lose 10% on this trade. You got to think about that every single time. If we're wrong in this play, what are we going to lose? We're going to lose 10%. All right, keeping that 10% in mind, right, and keeping that max risk in mind, we can determine how much money we're able to put into this trade. We determined with this max risk, 10%, we're able to put $250 into the trade. Now, again, that is 50% of the portfolio, but we're only going to lose $25, right? We're only going to lose $25 on this trade, which is about 5%. This is max, right? You don't have to put in $250. You can put in less. That's the max we're able to do on a 10% loss, right? We'll lose $25. That's about 5% of the portfolio. This is a little bit more aggressive, I would say. Now, if you guys want to play a little bit more safer, you do 2%, right? And your max risk is going to be, let me just delete this. Your max risk is going to be $10. Okay, there it goes. Max risk, $10, right? See how that stays the same? Max risk should always stay the same as well. If it's 2%, so that's $10. So we're going to be risking about 20% of our portfolio. Not risking, you're going to put a position size of 20% of your portfolio, right? So we're going to put in $100 into this play. And we already know that if we're wrong on this play, we're going to lose 10%, which is about $10. So if we're wrong in this play, we'll lose about 2%. of the port, which is not bad at all. It's pretty conservative. Max risk is going to be $10. So again, this is what my risk management would be. Of course, in every single trade, no matter how big or small your port is, you got to know, if I'm wrong on the play, what is going to be my loss, right? What am I going to lose? 10%. Okay. Everyone should already have their max risk depending on your account size. Let's say it was a $50,000 account. Your max risk is going to be $1,000. This is the most I could lose per play. And then just taking that in mind, of course, just go off of that, right? It's basically like an algorithm, honestly. So now we went over the risk management part of that. Now, what are we going to do with taking profits? Now, might be a little difficult, and we're going to be limited to how many contracts we're able to get and stuff like that. But with a $500 account, I would only get one contract, honestly. I would only get one contract, and I will be playing, $100 contracts, $200 contracts, depending on what my risk is, right? If my risk is 10% and I'm using that 2% rule, that's $100 right there. So I will only be able to get one contract, and you're not going to be able to get NVIDIA or Tesla or something like that. You'll be able to get AMD, or you'll be able to get AFRM or something like that. So you got to be very careful about the stocks you're going to be looking at as well. Don't go too far, don't go too cheap like Lucid or Neo or something like that, because sometimes they really don't move like that, and you can't really scalp those if you're scalping, right? I'm a scalp trader. I'm a momentum trader. It ain't going to really be that profitable, the cheaper you go per share, compared to like Tesla or something like that. So like AMD, AFRM, those kind of things I'll be looking at to make sure, depending on how much the contracts are and stuff like that. I would only be getting one contract, minus 10%. So, of course, we look for at least a 1R, meaning that if we're risking 10%, or if we're risking, if we're risking $10, right, with the 2% of 500, if we're risking $10, we have to make at least $10 on the upside, right? Or it's just not a great setup. Sometimes we're not able to make that $10 or 10% if we're risking 10%, or if we're risking 20%, sometimes we're not able to make 20%. It's just a setup. Sometimes it happens to be a little bit more, sometimes it happens to be a little bit less. It all depends on the setup and, the current conditions of the market. But for the most part, this is a rule of thumb, at least a 1R. Usually shoot for like 2R, something like that. It's whatever the market gives you. Sometimes you get a 5R, which is phenomenal. But for the most part, 1 to 2 is perfect. So let's just say I would honestly, depending on what the market is doing, like for example, if this is NQ, right, which is a market internal, let's say NQ is also breaking out with high volume, right? Let's say NQ is just breaking out with high volume. Same thing here with NVIDIA, right? I might hold this position a little bit longer depending on, that should be a D, depending on how well these contracts are moving and how well the position is moving as well, depending on how the ask and bid is on the tape. I might just move my stop up, right? Let's just say, for example, this came up like that. Our stop is going to keep moving up, right? Our stop is going to keep moving up. That's one thing I might do, right? And I might take profits like here or something like that, or just here. But again, you're playing with a $500 account, so you might be a little bit emotional, which is totally fine. It's normal as traders to be emotional when you're starting out. I did make a video about being emotional. So what you might want to do is you might just want to take profits on that first push. Again, don't become emotional with that. You might at first, but it's okay to scale out and take profits on the first push. You're starting to get used to it with your account. On that first push, you should be up like 15%, 20%, depending on how well the setup is. And then once you start, utilizing that and starting to take profits, you can start to hold some stuff and just moving your stop up. So either or, what I might do to get the account started is I might just take profits on the first push, keep taking profits, get it up to like $600, $700, and then I would start moving my stop up, seeing how well that goes, and then from there, you move into the $1,000 range. So that's exactly how I would take profits on the $500 account. So we went over risk management and the profit taking. The next part of it is, let's see. So we have the $500 account. We're risking about 2%, 2 to 5%, depending on, how risky and aggressive you want to be. Taking profits. At first, I'm probably going to take profits on the first move, and then after that, I will start to move my stop up, depending on how well the play is actually moving and how well, the entire market is as well. Like if NQ is moving up and we're getting into NVIDIA calls, I might hold it, right, and I might move that stop up. But if NVIDIA is, pumping, right, and NQ is literally flat, I might, take profits on that first push or be a little bit cautious with holding it any longer than I have to. And I think that's pretty much it with the $500 account. It's pretty much, the first video that I went over pretty much went over everything, no matter what account size you have. Now we're going based off of, account sizes, like the $500 account, $100 account, whatever you guys want me to do. That's exactly what I would do with this size. Again, don't expect a miracle with $500. You just got to play it safe and don't become emotional because you don't make a lot of money with $500. It's like giving someone $10 and expect it to be $1,000 by tomorrow. It's just not how it's going to work. It's all about educating yourself now and just learning now, right? Learning and becoming disciplined with the $500. And then once you start to move that up a little bit, maybe you're starting to get a little bit more confident, then you can start to add money into your overall portfolio. So hopefully you guys liked that video. Hopefully it helped you guys a little bit. If you guys have any questions or you want me to do a video about tape, for example, or level 2 or something like that, comment that down below. Other than that, make sure you guys subscribe and leave a like, and I'll see you guys in the next video.